Good evening, everyone. Welcome to MarketSmith India's weekly market wrap. This is Rajashekar Kongari, equity research analyst at William O'Neill India. It has been a dreadful week for investors. Just when you think the global pandemic was over and the growth trajectory is back on track, a new situation has emerged. That is, Russia invaded Ukraine during the week. This will have a bad impact on the growth trajectory. I'll discuss about the war and its impact in the later slides. But let's start by analyzing Indian markets. During the week, Nifty was down 3.5%, majorly because of Thursday's action. It breached its 200 DMA for the first time since July 2020. Following O'Neill rules, we have changed market status to downtrend, a status where we do not add positions to our model portfolio. However, we have emptied our model portfolio on February 8th itself by looking at the technical parameters. We have advised our clients as well to stay in cash rather than losing in the market. Coming to the Russian-Ukraine conflict and its impact on global economies. Russia is a major player in commodities market. It produces 6% of world's aluminum, 7% of nickel. Also a major player in palladium market as well. All these metals have made all-time highs or multi-year highs. Gold, which is considered as a safe haven asset in terms of uncertain times, has also jumped 3% to $1,950 per ounce compared to $2,067, which was made in March 2020 correction. These high commodity prices will further increase inflation rates. Already the global economies have been fighting the high inflation rates. US in January has reported annual inflation of 7.5%. That is 40-year high. UK also reported 30-year high. In India, inflation rates are also very bad. That is higher single digits or lower double digits. This will further add up the inflation rates by 100 to 200 BPS. One more major point I would like to discuss is the crude oil situation. Russia is a major player in energy resources. That is, it is the second largest natural gas producer, third largest crude oil producer. In 2021, it has produced 11% of total global crude oil exports. Around 35% of Europe's natural gas are exported from Russia. The pipeline is through Ukraine. So any bad situation in Ukraine will definitely impact energy sources to Europe. Coming to India, it imports 85% of crude oil. Hence, any further increase in crude oil will definitely impact our finances. According to our recent economic survey, government has estimated crude oil prices to be in the range of $70 to $75 per barrel range. However, because of this situation, the Brent crude has touched $100 per barrel for the first time since 2014. According to RBI estimates, a $10 increase will impact deficit by $12.5 billion. Now you can see there is a $30 difference compared to our estimates to the current price. This will increase our inflation at least by 100 BPS. That is what most of the economists feel. Coming to the outlook for the week, we are in very uncertain times. Anything can happen during the weekend. Any news, there is high chance of major news flows coming. That may be good news or the bad news. We hope good news comes and the situation eases in the Ukraine-Russian border. However, it is very crucial in times like this to follow rule-based investing rather than buying potential bottom, because it's very difficult to identify the bottom. You never know which is the bottom. We send out emailers every day, morning and evening. You can see our market status and how we are approaching towards the market. From here, if Nifty retakes its 200 DMA and stays above yesterday's low, we'll change the status to market rally attempt, and we'll see how the global situation is, and we'll look out for stocks which are breaking out or reclaiming their moving averages to add to our model portfolio. Thanks for joining our podcast and have a happy weekend.